Once again, welcome back to the session, everyone. Welcome to the second day of AAA Advanced Audit and Assurance paper. And in the last day's session, we were discussing about all the important areas of a 50-mark syllabus. And we were also discussing the way in which we need to present the answers in relation to each 50 marks area. So if any one of you have missed the last day session, you can find the same video as day 1 in our YouTube channel. So please do refer to the same video. And we will quickly brush through the last day's topics. So we were discussing about the 50 marks area. And in the last day session, we have discussed that when it comes to the paper AAA, 50 marks, there will be question based on risk. And that can be an audit risk, business risk, risk of material misstatement with analytical procedures. There can be possibility of getting questions based on additional information. There will be questions based on audit procedures as well as questions based on ethics as well. And as we discussed last day, we have understood that basically when it comes to the area of audit risk, there can be chances of getting a question based on audit risk with accounting treatment or without accounting treatment. And when it comes to the risk with accounting treatment, we are required to provide the materiality computation. Accounting treatment have to be clearly specified. Whatever things will go wrong in the scenario should have to be properly given. And when you given that, it should be a combination of scenario plus the accounting treatment which is actually required. Finally, you should need to reflect the impact that will be created over the auditor's report. And when it comes to the materiality calculation, as we mentioned in the last day session, it can either be calculated on the basis of the statement of P&L or on the basis of the statement of financial position allowance. And when it comes to statement of financial position, you can calculate the materiality either on the basis of the total asset or on the basis of the net assets. And when it comes to the total asset, the benchmark will be 1% to 2%. And when it comes to the net assets, it will be 2% to 5%. And based on the analysis, we can also consider the materiality based on statement of profit or loss related figures, which includes profit, revenue, and gross profit. And when it comes to the profit, the materiality benchmark will be between 5% to 10%. And for revenue, it will be 0.5% to 1%. And for the gross profit, it will be 0.5% to same 1% itself. So you can easily remember it like this, except in case of net assets, in all other situation, the twice the amount of lower limit will be the upper limit. And it will be the discretion of the examiner, and the examiner will ask you to use a specific benchmark. However, the range it will be determined purely by the candidate itself. So it is the requirement of the examiner in order to identify whether you need to select the lower limit or upper limit for the computation of materiality, and will be getting professional mark for that as well. So you are required to consider whether you need to use a lower limit or upper limit for determining the materiality. And consider that when you need to take a decision on whether to go with the lower limit or with the upper limit, as we discussed in the last day, you need to consider whether it's a new client for the audit firm. You need to consider whether it's a newly listed client, whether there is possibility of having management bias. Then you need to consider whether there is risk of material misstatements, corporate governance weakness, and internal control weakness. And in case if it's a new client or a newly listed client, in both cases, you must always go on with the lower limit itself. However, if it is not a new client or a newly listed client, alternatively, you can go for other options, like you can choose the upper limit. And when it comes to existence of any other factors, on the basis of the existence of factors, you need to trim down the limit chosen. Then, when you're getting question based on materiality, so you should also be considering the materiality on the basis of the nature of the transaction as well. As we discussed in the last day, materiality on the basis of nature will be basically be considered on the basis of factors that affects the going concern, or if there is any related party transaction, both can be considered as material on the basis of the nature of transaction. And these are just two examples which usually used to appear in almost all the exams. However, if there is any other fundamental disclosures, or if there is any other transaction which is based on the company's nature affects a user's decision, that should also be considered as material. Then there is also possibility of getting questions based on audit risk without accounting treatment also. And if you're getting a question based on audit risk without accounting treatment, you need to identify the risk. You need to properly mention what or how the way in which the will be considered as a risk, and you need to mention about the impact that will be created over the financial statements. However, in that case, you have to mention about the overall impact in the financial statements. So this is what you need to consider while calculating while identifying and explaining the audit risk. And in addition to that, you should also be considering the risk of material misstatement plus analytical procedures as well. So when you consider the risk of material misstatement, you should always be focusing more in this area. When it comes to risk of material misstatement, you should not mention to any detection risk. You will not get any marks because the audit risk will consist of detection risk, but the risk of material misstatement will consist only of the mistakes that might appear in the company's financial statements due to the inherent risk or due to control risk. And the examiner might also asking you to compute the ratios, or by performing analytical procedures, you might need to identify the risk in the company's financial statements. So basically, when it comes to analytical procedures, as we discussed in the last day session, you can compute a set of ratios. However, ratio computation merely will not give you additional mark. So for the purpose of getting mark, you need to focus more on analysis. You need to compare the current year data with that of the prior year, or the current year with data with that of the industry average. Then you can consider the possibility of having comparison of current year balances with the prior year, and the related link in the P&L or the related link in the SOFP should be considered. While reading the scenario, you need to cross-check the scenario to that of the financials provided. So these all have to be done in order to identify the possibility of mistakes in the financial statements. And as we discussed in the last day session, when it comes to the area of business risk, you have to identify each of the business risks. And as we discussed yesterday, business risk is nothing but whatever be the factors that affects the company's ability to achieve their objective or execute their strategy will be considered as business risk. So you need to identify the business risk from the scenario properly. You need to explain how it becomes a business risk. And finally, you need to show the impact on the entity and not on the financial statements. And when you show the impact on the entity, you can mention how this is going to affect the company's profit or margin, revenue, going concern, reputation, brand name, goodwill. In addition to this, you can also mention how this is going to affect the company's cash flows and so on. So you will be mentioning about the impact on the entity. Then, in addition to that, when you consider writing answer in relation to additional information, you should always consider the additional information which you are required to obtain to understand whether there is any actual possibility of having mistakes in the company's financial statements. So to analyze the risk, you will be required to obtain additional information. So the examiner will be asking you to provide the list of additional information that you require to analyze the risk. So in that case, you need to properly mention about the document or information which you require, plus what are the purpose for obtaining that document. That should also be clearly specified, as we discussed yesterday. And again, when it comes to the area of audit procedures, here the examiner might be asking you to identify all the procedures that can be performed by the auditor to identify the possibilities of mistakes in the company's financial statements. So when it comes to audit procedures, you should be clearly specifying the procedure, plus whatever be the document or information which you require, that should also be properly specified, plus the purpose for which you are obtaining this information should also be clearly provided. So only if you give this all set of 3 points, then only you will be getting proper marks. So you need to explain whatever be the information which you require, that you have to clearly specify. So first you need to show the procedure, inquire, inspect, observe, whatever you need to do, that should be given, plus the document or information which you require, plus the purpose should also be properly specified. We learned yesterday. And the common procedures have also been discussed in the yesterday session. And next it's about the ethics. And whenever you get a question on the ethics, make sure that you are identifying the ethical thread, explaining it, and in relation to that, you should also be clearly specifying the safeguards that you need to take in relation to the ethical threats identified. And we have last day concluded that basically there will be 5 ethical threats, which includes self-interest, self-review, advocacy, familiarity, and intimidation. In addition to which, you should also consider the possibility of having management threat, which is the possibility that auditor might assumes management's responsibility as part of the audit firm's responsibility. I have asked you to go through the notes also relating to ethics. So please do revise that as well to get a proper understanding on how you need to present the answers relating to ethics. Alright, so all of these were the areas that we have discussed in our last day session. And as part of today's session, now we are going to have a quick discussion on how this part will be tested in your exam. So for which I am taking a sample question called Winbury. We are not going to practice a whole question for the time being, but instead we will be quickly brushing through how the questions will appear and how the requirement will be there for your exam. So normally for the 50 marks question, you will be getting a regular requirement. They will ask you to respond to the instruction in the partner's email. So you will be getting an engagement partner's email. So you need to respond back to the engagement partner's email. And basically, when you get a question, you will be getting an introductory paragraph. It is very important to go through the introductory paragraph because the client's year end will be specified here. You should always mark the year end date. Then the client company, it will be mentioned whether it's a listed client or not. So it will be mentioned whether it's a newly listed client or a already listed client. It will also be specified whether it's a existing audit client for the firm or a new client for the firm. So 3 points should be identified from the introductory paragraph itself. So you should consider whether it's a newly listed client, you should consider whether it's a new client, or you should also consider the year end date of the company. The year end date is specifically considered to identify the possibilities of having events after reporting period. So in the question or within the question, there may be some dates specified by the examiner relating to some set of transaction. So whenever you get dates in the scenario, you should compare it to the year end date to identify the possibilities of having year end events after reporting period. In addition to that, if it's a new client, you can specify the possibilities of having risk in relation to that. Say for example, if the auditor is if the examiner is asking you to write the audit risk, in case of a new client, we know that the possibility of having opening balance misstated will be high. In addition to which, the possibility of having detection risk will also arise. And again, when it comes to a newly listed client, the possibility of having managerial bias will be high. The possibility of having inherent risk that the client might not be having adequate understanding relating to the requirements of a newly listed client. The possibility of disclosures might be misstated is high. So you can mention to that. So to identify each of the risks, you should be focusing on the introductory paragraph. And thereafter, you have to go through the partner's email. The partner's email is also very important because when it comes to the partner's email, they will be specifying here about the benchmarks on the basis of which you have to select the materiality. So as it's mentioned over here, based on the analysis I have done on this industry, it is appropriate for the overall materiality to be based on profit before tax. So they have asked us to calculate the materiality based on profit before tax. So it's very important to calculate the materiality only on the basis of the profit before tax itself. And do we need to go for the lower limit or for the upper limit? So well, to identify that, we need to go through the whole financials as well as we need to go through the whole scenario. Then only we will be able to understand whether we only need to go on with the lower limit or with the upper limit. And as we can identify from the introductory paragraph itself, it's not a new client or a newly listed client. So it's preferably better to select the upper limit. And we should consider the existence of additional factors such as corporate governance weakness, management bias or internal control weakness and all. And if there is any existence of that factors, then we can reduce it down further from the top or the upper limit, and you might set a middle line. So whatever be your judgment on the basis of which you are selecting the lower or the upper limit, that should also be specified in your answer. So we'll look into that later. So here the examiner have asked you a total of 4 requirements. They have asked you to identify the significant business risk. So there are no specific factors that the examiner provides you to determine whether a business risk is significant or not. So while going through the scenario, whatever things that you feel might affect a company's operation and might affect the company's ability to achieve their objectives can be considered as a significant business risk. However, when it comes to the risk of material misstatement, significant risk of material misstatement, examiner is specifically asking you to prioritize that. So whatever be the significant risk of material misstatement, that should be identified from the scenario and should be prioritized. So which means you have to go through the whole scenario, then you need to pick all the possible risk from the scenario, and after picking all the risk, you need to prioritize it on the basis of the significance. And there are no stated benchmarks on the basis of which you need to filter it out. However, you can use your own judgments. The examiner is only required to examiner is actually asking you to make sure that you are using your professional skepticism to prioritize a significant risk. So I will give you some common criteria, but again I'm repeating the same thing, that these are not benchmarks. These are just general factors on the basis of which we will consider a risk to be significant. Such as you can consider the possibility of fraud. If it is mentioned in the scenario that there is high possibility of having managerial bias, then it's a significant risk. If it is relating to the economic accounting or other developments that occurred during the current year, such as the introduction of a new standard or the possibility of having impairments, it can be considered as a significant risk. The highly subjective areas or the judgmental areas, such as measurement of fair value or maybe the determination of an accounting estimate, all of this will be highly subjective and can be considered significant. Then the possibility of having unusual transactions. The client is performing acquisition of a joint venture for the first time and they are not familiar with the equity method. So in that case, the possibility of mistakes in the financial statements will be high. Same as that, the possibility of having related party transaction, complicity of the transaction, all of this can be considered as a significant risk. So the significance of the risk should be considered purely on the basis of the scenario. So you should consider the possibility of fraud, recent economic, accounting or other developments, subjective areas, unusual transactions, related party transaction or complicity of transaction. All of this can be considered as material on the basis of the nature of this particular set of transactions. So you can consider these factors, and if you get any points that meets this criteria, you can consider those particular set of issues or transactions in the scenario as significant. And again, however, these are not specific factors. You can use your own judgments. It's preferably better to use your own judgment. However, your judgments can also be based on these benchmarks. Then next, the examiner have asked you to identify and provide principal audit procedures to be performed in respect of classification of investment in LPS company. So they are specifically asking you to write the audit procedures in relation to the classification of investment. So when you get a question like this, you should be specific to the scenario. And again, finally, you're getting a question in relation to the compliance with law and regulation as well. So you need to answer that as well. So that's a theory question. At the same time, it's based on scenario. So you have to go through the scenario. So this is how you will be getting questions based on audit risk, risk of material misstatement, business risk and related area. See, it is very important to first of all understand whether you are getting question on risk of material misstatement or the audit risk. Because well, we know that if you're getting a question on risk of material misstatement, in that case, you are not required to provide any points in relation to the detection risk. However, on the other hand, if you're getting a question on audit risk, in that case, you should clearly specify about the detection risk as well. Sorry. So now let's look into the examiner's comment. See, the examiner have clearly given you the points in relation to the determination of materiality. So they have specifically mentioned that the email from the partner states that the materiality should be based on profit. Therefore, at the start of the answer itself, you should properly give the calculation of the materiality using the benchmark that is mentioned by the examiner, and you should justify that. And for this purpose, you can consider whether it's a new client or whether there is any possibility of having a newly listed client. In all this situation, you have to select materiality at the lower limit. And if it's an existing client, in such situation, you can go for the materiality to be at the higher range on the basis of whatever things that are being mentioned in the scenario. So when you mention the materiality benchmark, you should clearly state the judgment on the basis of which you have selected be the lower limit or the upper limit. So that should be clearly specified. Then again, when it comes to the evaluation of business risk, you are required to perform an evaluation of business risk properly. You need to explain the impact that it will have on the company, that is like on the profit or on the cash flow. And in addition to that, when it comes to the risk of material misstatement, it is mentioned that, well, we know that the risk of material misstatement is non-compliance with accounting standard, and it can also include control risk. So you must consider whatever be the accounting standards that might go wrong in the scenario, and you need to mention how this will go wrong and what will be the impact that will be created in the company's financial statements. And when it comes to the prioritization of the risk, you will be getting 1 mark for prioritization of the risk. However, you need to properly justify the reason for selecting that particular priority order. So they have clearly mentioned that you can give a reasonable experience and you will get the marks. So prioritization should be achieved by using your judgment. So you can use your own professional judgment to determine which risk will be having the highest priority. However, you have to clearly justify your sorry. However, you have to justify how you have prioritized the risk on the basis of your judgment, and your justification can either be included along with the risk, or you can include a separate brief conclusion part and you can summarize all the criteria there. So say for example, if you look at this scenario, so they have evaluated the business risk, and after that they have clearly specified each of the risk of material misstatement, and after writing the risk of material misstatement part, they have given a conclusion part. So within the conclusion part, they have clearly specified the criteria on the basis of which they have selected the priority order for each of the risk of material misstatement which they identified. So you can also follow the same format. However, as I mentioned earlier, you can use some common criteria for filtering the risk, and you can specify that criteria here as part of the conclusion that you have selected such risk on the basis of these and these criteria. Okay. And as we specified earlier, you should make sure that in order to get the professional mark as well as marks for materiality, you should be clearly providing the justification for the materiality as well. However, see, the examiner will be always be asking you to write answers in a form of briefing note. So the examiner will be asking you to respond back to his email. So you should consider that the examiner is the audit engagement partner. So audit engagement partner is emailing you and you need to reply back to that email. So you will be replying back it in the format of a briefing note. So when you give a reply to an email, we know that the sender will automatically be the receiver. So we will make it to the audit engagement partner from the audit manager. Subject will remain the same and the date will remain the same. You can mention that the briefing note is relating to the audit of Winbury company for the year-end audit of, you should specify the year-end date, and you should mention that the briefing note will include, you can specify the same requirement. Then after that you need to give a heading for the materiality, and you should specify that the overall materiality for the engagement will be chosen on the basis of whatever be the criteria or benchmark provided in the question. You should specify that. In this case, it's based on profitability. And then you should give the justification heading, and then you should specify whether you have selected the lower limit or upper limit for the materiality. Then you should specify the basis of which you have selected that. So you can always go for the same criteria which we learned. You should consider whether it's a new client, newly listed client, possibility of having management bias. Then you should consider the possibility of having internal control weakness. Then high risk of material misstatement, managerial bias, all this have to be specified. So if at all it is not a new client or a newly listed client, you can specify the same thing. You can mention that even though it's not a new client or a newly listed client, we have selected the middle line as the client represents a lot of material, possibility of having material mistakes in the financial statements. In addition to that, the client company's corporate governance is weak and the internal control is also having deficiencies. Therefore, on the basis of our professional judgment, we have determined to select 0.7 million as the materiality limit. So in such a way you can mention the materiality, and you should also include a statement that the materiality is being selected at the planning stage of the engagement, and on a later on stage it might be revised. Okay, so this is how you will be providing the briefing note ka format as well as the materiality and its justification. And then you should identify each of the business risk and risk of material misstatement. You have to prioritize it on the basis of the criteria, and at the end of it give a conclusion paragraph to specify the criteria on the basis of which you have selected and ordered the risk identified from the scenario. In addition to which, these are the examiner's comment on the professional mark. You will be getting professional marks such as communication for responding back to the partner's email. So you will be getting marks for the preparation of the briefing note format as well as stating the benchmark for materiality. When it comes to the analysis and evaluation part, you will be getting proper marks on deeply diving into the scenario as well as explaining the risk and other related issues on the basis of the scenario given information. When it comes to professional skepticism and judgment, you will be getting professional mark for appropriate computation of the materiality and for the critical thinking. And when you use the possibilities of having managerial bias and all in the scenario, and when you connect it to the financial figures by performing analytical procedures, you will be getting mark. And for the commercial acumen, when you give proper recommendation, especially when it comes to the area of ethics and weakness in the company's internal control and all, when you give proper recommendation on the basis of the given scenario, you'll be getting marks for that as well. So these are the basis of which you'll be getting professional marks for the AAA paper in 50 marks question. So make sure that you're following each of these criteria in order to attain maximum mark as possible from the area of 50 mark question. So everyone, please practice 150 mark question today itself. We have already practiced all the important 50 mark question, not just all. We have practiced all the important in the sense that we have got around 16 questions and we have already done almost all the questions from the class itself. So please do revise all those questions which we have already done in our regular session. In addition to that, if anyone is attending only this revision class, then in that case, please do practice at least 3 or 4 questions from the same area of audit risk, business risk, risk of material misstatement, and other areas of the 50 marks. And if possible, do the latest available questions as possible. All right. So now we will focus on the area of our 25 marks questions, which is another important area of our AAA syllabus. So one of the 25 marks question will be based on reporting. So it is important to understand the theoretical knowledge of the reporting. So we have already covered the reporting part very well during our regular sessions. So well, we know that as an auditor, we need to express an opinion on the financial statements of an entity. And when it comes to the opinion part, basically there will be modified opinion. And at the same time, there will also be unmodified opinion, which an auditor will express over a company's financial statements. And the modified opinion can be further split into 3 categories, which includes qualified, adverse, and disclaimer of opinion. And the unmodified opinion can be further classified into unqualified opinion, which means the financial statement shows a true and fair view. So these are the types of opinion that we will be expressing over a company's financial statements. So well, we know that when it comes to an unqualified opinion, it means that the company's financial statement shows a true and fair view. When it comes to adverse opinion, it means that the company's financials does not give a true and fair view. Then disclaimer of opinion means that the auditor is not able to express an opinion on the financial statements of an entity due to the lack of audit evidence. Then, when it comes to qualified opinion, it means that the financial statement shows a true and fair view, but it is subject to some reservations. So, which means, except if some mistakes are avoided, rest of the financial statement shows a true and fair view. That is something called qualified opinion. So, these are the types of opinion on which we will be providing in our auditor's report. So, in order to determine which of these opinion have to be expressed, we need to consider whether there is any possibility of mistakes in the financial statements. And consider that we have identified a mistake of 20,000 in relation to an interest expense. The company have not properly included an interest expense in the company's financial statements. So in that case, we need to consider whether the amount of 20,000 is material, as well as we need to consider whether the amount of 20,000 is pervasive. So we need to consider whether a mistake is material as well as whether a mistake is pervasive in order to form an opinion on the financial statements. And the materialities can be considered on the basis of the benchmark which we learned earlier. However, in case of 25 mark question, we are not required to consider the upper limit of materiality. We are only required to consider the lower limit in the benchmark. So we should be considering these factors. We need to consider whether the amount of mistake is more than 1% of the total asset, more than 2% of the net assets, more than 5% of the profit, more than 0.5% of revenue, or more than 0.5% of the gross profit. If the amount of mistake is more than any of these materiality figures, then that should be considered as material. Or we can also consider whether it is material on the basis of its nature as well. We need to consider whether it's a matter relating to the going concern ability of the company, or whether it's a matter relating to the related party transaction. And if it meets any of these factors, it should be considered as material on the basis of the nature of the transaction. So the materiality should be purely be considered on basis of these factors. So in addition to this, we should also be considering the materiality on the basis of the existence of any other nature related points in our scenario. If consider that if the scenario specifies that the company is having a mandatory requirement by the local legislation which requires that companies should specify about a particular disclosure, maybe disclosure in relation to the remuneration of the directors in the company's financial statements, and if the company have not given that disclosure, that can be considered as material. As it is required by the local legislation, it should be a material disclosure because it will be affecting the user. So in that case, if it is not provided, so it's a material mistake. So in this manner also, you should always be considering the nature other than going concern or the related party. There can be chances of having other points as well relating to the nature. Then once you have identified the materiality, then you need to consider whether the transaction is pervasive or not. So in order to understand whether a mistake is pervasive, we need to understand the additional factors. See, say for example, as per standards, the standard clearly gives us the guidance on the basis of the factors by which we will be considering a mistake as pervasive or not. So pervasiveness is basically the term which an auditor used to describe the effect of a mistake in the company's financial statements. So basically, we will be considering pervasiveness of an item or of a transaction by considering how much impact it is creating over the company's financial statements. Say for example, if a particular mistake is having impact over multiple elements of the financial statements, it is not confined to a single element. The company's financials, multiple elements are affected. Say for example, if a mistake in relation to the impairment of the asset is not appropriately treated or adjusted in the company's financial statements, well, we know that if the amount of impairment is high, it will automatically have a significant impact over the total asset as well as on the company's expenses. So the profit will be overstated, value of asset will also be overstated. So these are not confined to a single element or item in the financial statement. It affects multiple elements in the company's financial statements. So that can be considered as a pervasive mistake. Same as that, secondly, we need to consider whether the mistake is affecting only a single element of the financials, but it is representing a substantial portion of the financial statements. Say for example, the mistake is affecting only the company's revenue, but 60% of the revenue is misstated. So in that case also we can treat it as a pervasive mistake. Then again, we should consider whether the mistake is relating to fundamental disclosure, and if any of the fundamental disclosures, say for example, if the going concern related disclosures are not provided, so it might be a pervasive item in the company's financial statements. So these are the criteria that are specified in the standards which you can use to determine the pervasiveness. However, from an exam point of view, you are not required to consider pervasiveness in this manner, but you can follow another easy method. So first of all, you need to consider whether the company is in profit or not. So when you look at the scenario, you understood that the company is in a profit of 100,000 and there's a mistake in the company's financial statements relating to an expense of 120,000 and the mistake is not adjusted in the company's financials. So what will happen if this mistake is actually adjusted in the company's FS? The company will result in a loss of 20,000, right? Company will result in a loss of 20,000. So in this case, the amount of mistake is pervasive because the company's profit is restated into losses once the mistake are adjusted. So this amount of mistake can be treated as pervasive. So in the same manner, consider that the company was already in a loss of 25,000, okay? And there's an income which the company have not adjusted appropriately and the amount of income is 30,000. So what happens if the income is actually adjusted? Company will have a profit of 5,000 in that case, right? So in this situation, the amount of mistake can be treated as pervasive. So this will be the basic assumption that an candidate can use in order to determine whether an amount of mistake is pervasive or not. You should consider whether the profit of the company is restated into losses or the loss of the company is restated into profit once a mistake are adjusted. If yes, it's pervasive. If no, it's not pervasive. So you should be considering whether the profit is restated into losses or the losses are restated into profit. In both cases, you can consider that particular transaction as pervasive. So you will first determine whether the amount of mistake is material, then you need to consider the pervasiveness. So only if a mistake is material, then only we will consider whether it is pervasive or not. So I am marking misstatements in red color, okay? So there is a misstatement of 20,000 in the company's financial statements. Consider that the amount of mistake is not material and not pervasive. So in that case, we will be giving unqualified opinion. If the mistake is material and pervasive, we will be giving adverse opinion. If the mistake is material but not pervasive, in that case, we will be giving qualified opinion. Or on the other hand, consider that there is an amount of mistake in the company's financial statements. Okay. However, when we consider the possibility of mistake, we understood that in order to conclude whether it's a mistake or not, there is no evidence available. So there is lack of audit evidence. So with regarding the amount of 20,000 interest expense, company is not able to provide us with adequate evidence, and there is lack of audit evidence. And if the lack of audit evidence is not material and not pervasive, in that case also we will be giving unqualified opinion. And if the lack of audit evidence is material and pervasive, we need to give disclaimer of opinion. And if the lack of audit evidence is material, not pervasive, we will be giving qualified opinion. So literally you have to keep this one in mind. In case of both the misstatement or lack of audit evidence, if either the mistake or lack of audit evidence is not material and not pervasive, in both cases we will be giving unqualified opinion. Or if the mistake or lack of audit evidence is material but not pervasive, we will be giving qualified opinion. And only in case of material and pervasiveness, only in case of material and pervasive situation, the opinion will be different. When the misstatement is material and pervasive, we need to give an adverse opinion. When the lack of audit evidence is material and pervasive, we need to give a disclaimer of opinion. So this will be the way in which we will be expressing opinion in a company's financial statements. So keep this one in mind. Okay, fine. So now once we are ready with this theoretical part, so now we are ready, right? So in this case, now let's move on to the next area. We'll be starting with the questions based on matters. So the examiner will be asking you multiple category of questions in relation to the reporting. You can expect any set of questions based on reporting part. So when it comes to the area of reporting, you will be getting questions to identify the matters to be considered and the audit evidence required, matters to be considered and further actions, matters to be considered in discussion with the management, matters to be considered in further procedure. All of this kind of questions can be asked from this area of reporting, and we will be revising all these areas in this session. So first area, it's matters to be considered and further actions. So when it comes to the matters to be considered further actions part, we can now consider another question. There's a question called rocket in your revision kit. Rocket. It's an old question. It's 2020-21 revision kit. So if you look at the scenario, they have asked you to comment on the matters described above. Explain the further action necessary before the audit report can be signed. Discuss the implication for the auditor's report if no adjustment are made in the financial statements. So there are two requirements, right? And within the requirement also there are further requirements. You are asked to comment on the matter described above. Then you are asked to explain further actions necessary before the audit report can be signed. So you need to comment on the matter, then you need to explain the further action required as well. So here you need to show the impact of the auditor's report if no adjustments are made in the financial statements. So now let's read the question. Rocket Company is a listed company operating in engineering industry. The company manufactures machinery for the use in aircraft, defense and marine sectors. The audit for the year ended 30th April 2017 is almost complete. Revenue and profit before tax figures recognized in the draft financial statements are 1,437 million and 139 million respectively. Audit procedures identified two sales transactions in the final quarter of the year that relates to two different customers but where the goods were delivered to the same location. Further investigation revealed that goods were delivered to a third party who agreed to store them until the customers were ready to receive the delivery. The goods have not yet been delivered to the customers because they are both building new facilities and neither is sufficiently progressed to receive the new machinery. The contract term explicitly state that rocket company is obliged to deliver the goods to the customers for final inspection and acceptance, and the client has not agreed to any consequent amendments to these terms. The sales invoice were raised and the revenue recognized upon dispatch of the goods to the storage facility. During discussion with the audit team, the finance director stated that company had fulfilled its contractual obligation to provide goods by a specified date. The revenue attributable to the two sales transactions total 17 million. So they have literally told us that during the current year, company have signed contract with customers. Actually, we have discussed the same example last week. And they have clearly specified that as per contract, the goods are to be delivered to the customer warehouse and the final inspection of the goods have to be done by the customers. However, what the scenario specifies, they have properly stated that the goods were delivered to a same location and it's a different location from the customer location. And they have also mentioned that the goods are yet to be inspected by the customers. But what company have done, they have treated the 17 million as revenue and they have stated that they have fulfilled all the contractual obligations. So this is what it's mentioned in the scenario. And now they have asked us to comment on the matters. So when you get such a question, when you get a question to comment on the matters, first of all, you need to specify the materiality of this particular transaction. So here in this case, well, we know that 17 million revenue is recognized by the company. So you have to consider whether this 17 million of revenue stated here is material. Secondly, you need to specify the accounting treatment that is actually required. Third, you need to specify what went wrong. So this is not a question based on risk. Therefore, there will be something that is wrong in the scenario. So you should specify what went wrong. Again, here also you should specify the accounting treatment plus whatever be the scenario specifies that should be provided. And finally, you should be showing impact on the company's financial statements. And when you specify the materiality, unlike the 50-mark question, here you are required to consider only the lower limit of materiality. You are not required to specify the upper limit. So you need to take the lower limit benchmark and you can choose the benchmark on the basis of your preference, and you should consider whether it is material or not. And if it is material, you should specify that the amount is material. If not, you should have to clearly specify that the amount is not material. You will be getting marks for that as well. Okay. So how you can express the answers here? So in this question, it is clearly mentioned that during the current year, the company has signed a contract with some of their customers. So we need to identify the materiality. So you can calculate the materiality of this 17 million. So you've got the revenue as well as the profit figure here. So you can consider the materiality either on the basis of revenue or profit, or you can calculate on both of these. And if at least one of the amount appears to be material, in that case you can treat it as a material mistake itself. So first of all, you will be specifying the answer like this: the amount of revenue recognized in relation to the two sales transaction. The amount of revenue recognized in relation to the two sales transactions amounts to 17 million, and it represents dash percentage of the profit and dash percentage of the revenue. Therefore, it is material. If it's material, you can mention that. Then you have to specify the accounting treatment. As per IFRS 15, revenue from contracts with customers, revenue should be recognized only when the performance obligation relating to the contract is satisfied. Till the date, revenue should be treated as deferred income. Then you should specify the scenario and what went wrong, and the accounting treatment that misstated should also be given there. So how we can write that? You can specify that during the current year, rocket company have signed a contract with two of their customers, and under the contract it explicitly states that rocket company is obliged to deliver goods to customer for final inspection and acceptance, and the goods have to be inspected by the customers to consider as the completion of performance obligation. So the revenue should be recognized only once the event have been occurred. However, by performing the audit procedures, it is concluded that goods have been delivered to a different warehouse and goods are yet to be inspected by the customers. So the performance obligation are still outstanding. But the finance director have stated that company have fulfilled the contractual obligation and they have recognized the revenue of 17 million relating to two sales transaction. Therefore, the deferred income of the company is understated and the revenue is overstated. So this is how you need to present the matters part. Then once you present the matters part, next you need to write the further actions that it to be taken by the auditor. So the further actions have to be specified. So while writing the further actions, you should make sure that first of all you need to include the matters that you need to discuss with the management. Whatever be the things that you can discuss with the management, that should be specified. So basically that is nothing but how to correct that mistake. So you need to communicate with them about how to correct the mistake in the company's financial statements. Then secondly, you should make sure that you are taking action if the management is not willing to correct the mistake. What you can do, you can escalate the matter to those charged with governance. So if the management is unwilling to correct the mistake, you should communicate it to those charged with governance. And there will be cases where those charged with governance might also not be willing to correct the mistake. In that case, you should discuss with them about the impact on audit report that will be created. Then third, you should specify about obtaining a written representation if they are still unwilling to correct the mistake. Finally, you should also show the impact on audit report. So this will be the further action, common further action that need to be taken by the auditor. So you will be specifying your answer like this. The auditor should discuss with the management about the misstatements identified in relation to the revenue recognition of 17 million. Auditor should request them to adjust the mistake in the company's financial statements by removing 17 million of revenue and recognizing the same amount as part of the company's deferred income. However, if the management is unwilling to correct the mistake, auditor should raise the same request to those charged with governance. But still, if they wish to continue without amending the financials, auditor should discuss with them about the impact that will be created over the auditor's report if the mistake are uncorrected. And again, if they still wish to continue without amending the financials, auditor should obtain written representation from them stating the same. And the auditor should also reflect it over the auditor's report. So this is how you should be stating the further actions. So you should clearly specify what you need to communicate with the management, and that will be basically the request to correct the mistake. And you should also specify how you need to correct the mistake. And then if they are unwilling to correct the mistake, in that case, you have to communicate to those charged with governance and discuss the impact over the auditor's report. And you should also be considering about obtaining written representation stating all of the above. And finally, you need to show the impact over auditor's report as well. And in some questions, it might not be confirmed whether there is a mistake or not, and they might not have performed adequate audit procedures also. So in that case, you should also be specifying about the audit procedures also that you can perform in relation to this. So this is how you will be presenting answers in relation to matters as well as further actions that need to be taken by the auditor. Then again, they have asked us for implication over the auditor's report if adjustments are not made to the financial statements. So next will be the impact on audit report. Impact on audit report. So when the examiner asks you to specify about the impact on audit report, you should make sure that you should first of all again mention whether this amount is material. Then you should specify whether this amount is pervasive. Then next you should specify about the opinion that you need to express here. And finally you should also show the basis of opinion paragraph as well. Or you should just specify that the auditor need to include basis of opinion paragraph also. So in this case, consider that the amount of mistake is material. Okay. So in such a situation, we need to mention the amount is material. And we need to consider whether the amount is pervasive. Is this a pervasive mistake? Definitely not, right? Because the amount of misstatement in the financial statements is 17 million and the company's year-end profit is 139 million. Therefore, even if the profit is adjusted with the misstatement, in that case also the company's profit will not be restated into losses. So it cannot be treated as pervasive. So it's a mistake which is material but not pervasive. So what should be the opinion? Qualified opinion shall be expressed, and a basis of qualified opinion should also be provided following the opinion paragraph. So when you write the answers for impact on auditor's report, you have to just give a heading impact on auditor's report. Then you will be first of all specifying that the amount of misstatement in relation to the two sales transaction represents a material misstatement in the company's financial statements, as the amount of misstatement is uncorrected. However, even though the amount of mistake is material, it cannot be treated as pervasive, as the reported profit of the company is not restated into losses. Therefore, the auditor shall express a qualified opinion stating that, except for the matters identified in relation to the recognition of revenue, the company's financial statement shows a true and fair view. Following the opinion paragraph, auditor shall also express a basis of qualified opinion paragraph which would explain the material mistakes in relation to the revenue recognition and its impact over the financial statements. So this is how you need to present answers in relation to matters to be considered and further actions. So basically, whenever you write the matters part, you should be clearly specifying the materiality. You should specify the accounting treatment required. Whatever things that went wrong in the scenario should be actually provided. So make sure that you are giving answers specific to the scenario. You need to show the impact over the company's FS as well. So that should also be specific. You should not just mention that the company's financials will be misstated. Instead, you have to clearly specify whether the company's financial statements, elements, say for example, if it is profit, whether the profit will be understated or overstated, whether the total asset will be understated or overstated, that have to be clearly specified. And when you write the further actions part, you should be properly giving the possibility of discussing with the management, discussing with those charged with governance, obtaining written representation and showing the impact over the auditor's report. And when you write the impact on auditor's report, you should be properly following whether it affects the materiality, whether it's a material mistake or not. You have to specify whether it's pervasive. You have to give your opinion as well as a basis of opinion. So this will be the way in which you need to express answers in relation to matters to be considered part. Okay. So this is the first case, matters to be considered and further actions. Then, in the same manner, there can be chances that you will be getting questions on matters to be considered and discussion with the management. So there is a question in your revision kit and the name of the question is Boston. And if you look at the requirement, they have asked us to explain matters which should be discussed with the management in relation to uncorrected misstatements, including assessment of their individual impact on financial statements. Assuming that management does not adjust any of the misstatement, discuss the effect on audit opinion and auditor's report. So in this question called Boston, they have given us three scenarios, one in relation to the impairment, other one in relation to borrowing cost, another one in relation to the investment. And they have asked us to explain the matters that should be discussed with the management in relation to each of the mistakes mentioned above. And they have asked us to show the individual impact on the financial statements as well. So when you get this kind of question, make sure that the requirement should be requiring you to give the matters part. So same as how we explained for the matters to be considered further actions, you should be mentioning the materiality, accounting treatment, what went wrong, and impact over the company's financial statements. So this should be first of all done by the auditor. And from here, you are not required to provide the further actions part, because here you are not required to provide further action because it is not demanded by the requirement. So instead, they have asked us about what you need to discuss with the management. Therefore, you are only required to provide this part of the answer. So you need to write the matters part, and in relation to each of the matters, you need to specify what you need to discuss with the management. So this is what matters to be considered and discussion with the management requests you to provide as answer. And there's another question called basking. So if you look at the requirement, second requirement here, assuming management does not adjust any of the misstatements, discuss the effect on audit opinion and audit report. They have asked that if the management is not adjusting any misstatement, what will be the effect on audit opinion and audit report? So when you get this kind of question, first of all, you need to read the impairment part. You need to write the matters part and discussion with the management. but you are not required to give answers relating to reporting. Then when it comes to borrowing cost also same thing, investment also same thing. For each of these elements, you need to first of all provide the matters part, then discussion with the management. Matters part, discussion with the management. Matters part, discussion with the management. And for the second requirement, what you need to do, they have asked you that you need to consider that none of the mistakes are corrected. In that case, what will be the impact on report and opinion? So for such kind of question, you need to take the total of all of this mistake. So impairment, borrowing cost and investment, you need to take the total of each of these mistake, and the total amounts materiality have to be considered. You need to consider whether the total amount of mistake is pervasive, and then you need to show the impact on audit opinion and on the audit report. Clear? So that is the only difference here. And there's another question called basking, okay? Basking in the scenario. So when it comes to a question like basking, instead of asking you the overall impact, see, they have asked you to first of all explain the matters which you should discuss with the management. The same requirement that we discuss now. Assuming management does not adjust the misstatement identified, evaluate the effect of each on audit opinion. So they have asked you to evaluate the effect of each of these cases in audit opinion. So there are two different cases mentioned here. So in getting such kind of question, so you need to give the first heading called related party. If it's a transaction relating to related parties here in this scenario, then you need to write the matters part, discussion with the management part, reporting related answer. Then you need to write the next one, provision. You have to give a heading called provision. Then you need to write the matters part, discussion with the management part, and then the reporting part. And here the examiner is not asking you to show the impact on audit report. Instead, they are only asking you to specify the impact on audit opinion. In that case, when you write the impact on report part, you are not required to give the basis of opinion. You can avoid this. Only when the examiner asks you to give the impact on audit report, you should specify about basis of opinion. Or else, if they are asking you to give the impact over audit opinion, you should only write materiality, pervasiveness, and which opinion you need to express on the company's financial statements. So this is how you will be getting questions on matters to be considered and discussion with the management. Okay? Alright. Then, again in some rare cases, okay? Again in some rare cases, very rare cases, the examiner will be asking you to consider the matters, and they will ask you to perform further procedures. Matters to be considered and further procedure. There are some questions like that. So for the purpose of attending such questions, last day we have clearly discussed and studied all the important substantive procedures, right? Audit procedures. So further procedures are nothing but the audit procedures. So when the examiner asks you to perform further procedure, so you need to first of all give the matters part as usual. You need to specify materiality, accounting treatment, what will go wrong, and the impact in the FS. And then you should give the procedures which the auditor will be able to be performed. So you should consider from the scenario whether there is any possibility of having discussion with the management. Is there any possibility of getting a written representation? Is there any possibility of getting an external confirmation? Is there any possibility of reviewing correspondence between two persons? Is there any calculations which you can recompute? Is there anything which you can compare with the prior year or with the industry standards? Is there any expenses for which you can obtain breakdown? Whether there is any possibility of reviewing the board minutes? Is there any expenses that you can master the supporting documents? Is there any notes to financial statements? All of these have to be considered. Clear? So if you consider each one of these, then in that case, you will be able to easily perform the audit procedures. So when you get questions on matters to be considered in further procedure, first of all, you need to give the matters part. Then you need to write the procedures that can be performed by the auditor. Then there is another requirement which is usually being asked for almost all the exams. Using the information in Exhibit 1, comment on matters to be considered and explain the audit evidence you would expect to find during the review of audit working paper on 1st July 2015 in relation to issues identified. So the examiner have asked you to comment on the matters to be considered, and they have asked you to explain the audit evidence which you should expect to find during the review of audit working papers. So you know how to comment on the matters, right? So the same way you need to show the materiality, accounting treatment, what went wrong, and the impact. Then they have asked you explain the audit evidence you would expect to find during the review of audit working papers. in relation to the issues. So instead of performing procedures, they are asking you later on when you go for the review of the working papers, if the work is already done by another auditor, there will be some evidences obtained, right? So you are required to specify the evidences that you might be able to get from the working papers. So you have to consider the past of the audit. So in such a way that you should always consider that somebody have already done the audit work in relation to the scenario, and you are required to consider whatever be the evidences that they might have obtained. So to give answers for such questions, you can easily convert the procedures which we learned. Because here you are not required to specify the procedure, instead you are only required to give the document or information plus the purpose for which you are obtained that. So you should consider the possibility of inquiring or discussing with the management. So when it comes to the evidence, you will not be inquiring anything. Instead, you will be able to find notes of discussion with the management, notes of discussion with the management in the company's working paper. Then you will be able to find a copy of the written representation. You will be able to find an external confirmation or a copy of external confirmation. You will be able to find a review of correspondence. You will be able to find a recalculation sheet or recalculation schedule. You will be able to find an analytical procedure performed by the auditor in the working paper. You will be able to find a breakdown of expenditure. You will be able to find a copy of board minutes. A copy of board minutes will be there. You will be able to find an agreement of expenses to the supporting documents, or copy of supporting documents can be found there. A review of notes to financial statements will be there. So in such a manner, you need to make it into past tense, and you are only required to provide the name of the document or the information which you require, plus the purpose for which that particular information might have been obtained by that earlier auditor. So this will be the way in which you need to present answers in relation to matters to be considered part. So whenever you write the matters to be considered part, make sure that when it comes to audit evidence, you are only required to specify the document or information required and the purpose for which you are obtained that. So this will be the way in which the examiner will be expecting answers from you. So as we discussed, there are basically 4 categories of question directly based on matters to be considered part. First of all, it can be a question based on matters to be considered and further action. And in such situation, you need to clearly specify the matters first, and then you have to specify the further actions that can be taken by the auditor, which includes discussion with the management, discussion with those charged with governance, then obtaining written representations and so on. And when it comes to matters to be considered discussion with the management part, you are only required to specify what you need to discuss with the management. When it comes to matters to be concerned further procedure, you should always be specifying about the audit procedures that can be performed by the auditor in relation to the same matter. And when it comes to audit evidence, you are required to specify whatever be the evidences that can be found during the review of working papers. So make sure that you are familiar with each one of these requirements. Do practice maximum number of questions as possible, and make sure that you are focusing on the requirement part, because if you misunderstood the requirement and if you write further actions instead of further procedure, you will not get any marks, because when it comes to further procedure, they are demanding you to give the audit procedures, and when it comes to further actions, they are demanding you to give the step-by-step procedure by which the auditor will be performing his further actions. So both of the answers are entirely different. So make sure that you are clearly giving the answer purely based on scenario. So this is what you need to consider while giving answers in relation to matters to be considered. Clear? Okay. So as part of this session, we were discussing about the way in which we need to present the answers for our exam in the 50 marks area, in addition to which we were also discussing about the 25 marks area. So please do revise this part, and I believe you are familiar with all of these topics, because we were discussing each of this topic in detail during our session, because we were having more than 100 hours of session during the regular batches. And in addition to which, we were also practicing all number of questions, and I have also reviewed all of your answers. So please make sure that all the corrections mentioned during the session should be incorporated in your upcoming answers. And in addition to this, make sure that you are revising all the important theoretical areas as well. And please do attend next day session as well, in which we will be discussing all other important part of the 25 marks question. So we need to discuss the critical appraisal, advertisement, tendering, and all other related areas in the next day session. So please do attend the live session itself. So thank you so much everyone. Do revise, practice maximum number of questions, and perform well for the upcoming exam. All the very best everyone. Thank you.